Good day, everyone. Welcome to another video lecture on the subject Government Accounting and Accounting for Non-for-Profit Organization. This is your facilitator, Prof. Jans. So we are going to discuss Chapter 6 or Module 6, which is Financial Instruments for Government. The learning objectives for this chapter are: first, define a financial asset and liabilities and give examples. Account for cash and cash equivalents. Account for receivables. Account for investments. Initial and subsequent measurement of financial liabilities. For the first part of our discussion, we're going to tackle about financial assets. So the second part is about financial liability. Under financial asset, let's define some terms that we are going to use. First is financial instrument. It is any contract that give rise to both financial asset of one entity and a financial liability or equity instrument of another entity. So that's from PPSAS 28, paragraph 9. So there are characteristics of financial instrument. First, there must be a contract. Second, there are at least two parties to the contract. Siyempre may kontrata, so at least two parties. And third, the contract shall give rise to both, una, financial asset to one party and a financial liability or equity to another party. So yun yung financial instrument. A financial asset is any asset. So, any asset daw. But, must qualify daw in any of. Okay? Any of these dun sa letter A to E. Una, it must be, that is, any asset that is cash. So, example natin dyan is cash and cash equivalent. So, next is an equity instrument of another entity. So, equity instrument. Example, investment in equity. In debt securities. In debt securities, sa letter C yun eh. Letter C is a contractual right to receive cash or another financial asset from another entity. So, contractual right to receive cash. So, makaka-receive ka daw ng cash from that asset or another financial asset. So, example niyan is receivables. Kung sa government, example niyan is accounts receivables, notes receivables, loans, receivable from GOCCs, receivables from LGUs, or receivables others. So, yan yung mga example ng receivables sa government. Letter D, a contractual right to receive or to exchange financial instrument with another entity under conditions that are potentially favorable or a contract that will or may be settled in entity's own equity instrument. Ang example ng letter D, yung tinatawag nating derivative assets. So, yan. Initial recognition or we record financial asset when an entity becomes a party to a contractual provision of instrument. So, yan daw yung initial. Kailan daw natin siya i-recognize? We recognize financial asset when an entity becomes a party to the contractual provision of the instrument. Financial assets are initially measured at fair value. Fair value plus transaction cost, except for financial asset at fair value through surplus or deficit. Yan po yung profit and loss sa mga private entity or sa PFRS. Pero dito sa government, ang tawag po sa kanya is fair value, financial asset at fair value through surplus or deficit, whose transaction costs are expense. So, mamaya ipapakita natin yan. But what are transaction costs when it comes to financial asset? Example doon ay are incremental costs that are directly attributable to the acquisition, issue, or disposal of financial instrument. So, ito yung summary pagdating sa initial measurement ng financial asset. So, meron tayo dito sa table, meron tayong type of financial asset. We have financial asset at fair value through surplus or deficit. So, sa PFRS, financial asset at fair value through profit or loss to. And the other one is financial asset not at fair value through surplus or deficit. So, meron dyang iba't ibang klase ng financial asset na qualified dito. But initially, ito yung una mong pag-iisipan. So, regardless of the classification, kung ang financial asset daw is at fair value through surplus or deficit, initially, it is recorded at fair value, whose transaction costs are expense outright or outright expense. On the other hand, siya naman po yung fair value plus transaction cost. So, ano yung mga transaction costs? Those are directly attributable to the acquisition, issue, or disposal of financial asset. So, kung sa kabila, kung sa fair value through surplus or deficit, expense po siya, dito, it is included in the cost of financial asset. So, lagyan natin ng example. If the financial asset is measured at fair value through surplus or deficit, transaction costs are expensed outright. In example below, assume there is 10,000 transaction cost. So, paano natin i-record yon? So, debit, financial assets, held for trading. Yung held for trading, ano ito? Yan yung fair value through surplus or deficit. So, isa siya. Itong financial asset na to is isa sa mga financial asset at fair value through surplus or deficit. So, financial asset held for trading, 500,000. Credit, cash in bank, local currency, Bangko Sentral ng Pilipinas, 500,000. So, this is to recognize the acquired financial asset held for trading. See, the 10,000 transaction cost is recorded as expense. Ma'am, paano po natin masasabing expense? The account title is other financial charges. And if you will notice the account code, yung account code niya is starting with number 5. So, ibig sabihin, expense account yan. And credit, cash in bank, local currency, Bangko Sentral ng Pilipinas, 10,000. Doon naman sa isa, if it is classified as financial asset not at fair value through surplus or deficit, yun daw, transaction cost of 10,000 is included sa cost ng financial asset. So, debit, investments in treasury bonds, foreign, investments in treasury bonds, foreign, credit, cash in bank, local currency, Bangko Sentral ng Pilipinas. So, 500,000, 510,000. So, yan po yung example ng so, ito yung example ng journal entry for the two classification or for the initial measurement of financial asset. So, let's go to the topic of accounting for cash and cash equivalent. So, napakarami po ng pwedeng pag-usapan pagdating sa cash and cash equivalents sa government. How to handle cash. So, meron nga po tayong tinatawag sa government na cash management system. So, nakalagay din po doon. Meron din po tayong tinatawag sa COA na cash management manual. So, yun po na nakasulat doon na yung mga proper guidelines, procedure in managing and safeguarding cash and cash equivalent. But what is cash? Cash comprises cash on hand, cash in bank, and cash treasury accounts. Pag sinabi natin cash treasury accounts, ito po yung cash MDS regular or cash treasury agency deposit regular. Pwede ring cash MDS trust. Yan. Or cash MDS special. So, yun po yung tinatawag na cash treasury account. So, first topic for accounting for cash and cash equivalent is adjustment for unreleased commercial checks. So, ano po ang nangyari dito? Yung nakapag-prepare ka na ng cheque, but then unreleased pa siya. Checks drawn, but not yet given to the payees as of the end of the period or as of reporting date. So, ano yung magiging adjustment? Reverted to cash. So, ano yung entry? Debit cash in bank, local currency current account. Ma'am, bakit po cash in bank, local currency? Kasi nga, commercial checks ito. Credit payable. Kasi nga, hindi na-extinguish yung liability mo. The check is not physically canceled. Hindi siya kinakancel. Yung mga unreleased checks at the end of the period, hindi naman po yan physically kinakancel. Sa libro lang po natin yan, nagkakaroon lang ng adjustment. But at the beginning of the following year or the following period, there will be a reversing entry to recognize the availability of the checks for release. And this does not apply to cash MDS regular because at the end of the period, unused NCA is reverted to national government or binabalik sa national government or kay BTR. Therefore, yung account ng cash MDS regular is zero out. Wala ka nang kailangang i-reverse next year kasi zero naman yung account na cash MDS regular. Another topic is accounting for canceled checks. Bakit ba naka-cancel ang cheque? First, pwedeng dahil na-stale yung cheque, voided, or spoiled. A check is considered stale if it has been outstanding for over 6 months from its date, from the date it was written. Replacement will be done sa checking na cancel only when the canceled checks were submitted to accounting unit. So, anong entry natin for canceled checks? Kunyari, MDS check, yung na-cancel. If the check canceled was issued current year, ang entry niya is debit cash MDS regular, credit accounts payable. But if the check was issued prior period and you cancel it this year, ang debit niyan, debit accumulated surplus deficit credit accounts payable. Bakit accumulated surplus deficit? It is because last year, the ending balance or the balance of cash MDS regular is zero out. Tama? Nasisiro siya eh. Binabalik all unused. Cash MDS regular is binabalik sa national government. Di ba isa yun sa adjusting entry na napag-usapan natin last time? So, isa yun sa mga adjustment. So, zero na yung account or yung balance ng cash MDS regular pertaining to last year. So, saan mo na siya i-charge? It will be charged to accumulated surplus deficit. But, if yung na-cancel na cheque is pertaining to a commercial check, yung entry regardless of the period the check was issued, it will be debited to cash in bank, local currency, current account. So, yan po yung pag-account for canceled checks. Next topic is about petty cash fund. Petty cash fund of a government entity is maintained using the impressed cash system. It is sufficient to defray recurring petty expenses for 1 month. So, magkakaroon ng research or study, magkano ba yung dapat i-set up na petty cash fund for petty expenses good for 1 month. It is used for disbursement not exceeding 15,000 per transaction. Meaning, kung more than 15,000 na yung bibilhin mo, gagamitin mo na yung normal disbursement ng government, which is yung disbursement voucher. Splitting of transaction to avoid exceeding the ceiling of 15,000 is prohibited. Kasi nga, 15,000 yung ceiling para hindi na kailangan ng maraming approval, chechuchu, ganyan-ganyan. or maraming signatories, kasi nga sa disbursement voucher, maraming nakasign doon. Maraming i-request pa, i-approve pa, using the normal disbursement system. So, ang ginagawa ng iba is ini-split nila para hindi umabot ng 15,000. So, that is prohibited. A canvas of at least 3 suppliers for purchases amounting to 1,000 and above. So, kailangan ng canvas. Meron po yung form na fini-fill out para dun sa canvas. Replenish as soon as disbursement reach 75%. 75% ng ano? Nung mismong petty cash fund. Kunyari, ang petty cash fund po natin is 10,000. So, pag naka-reach na po ng 7,500, pwede ka na pong mag-replenish ng petty cash fund or as needed. Close only upon the termination, separation, retirement, or dismissal of the petty cash fund custodian. So, meaning pag, kunyari yung petty cash fund custodian po is nag-leave, ma'am, i-close po ba yung petty cash fund? Hindi. Kasi naka-leave lang naman siya. Ang mangyayari, magkakaroon ng special order na kung wala yung petty cash custodian or petty cash fund custodian is merong magte-take over. So, ganun po yung para doon. But only upon termination, separation, or retirement, or dismissal ng petty cash custodian, makuklose yung petty cash fund. Pag sinabi nating makuklose yung petty cash fund, is ibabalik po yung petty cash fund sa treasury or sa sa treasury department ng agency. So, ang mga entries na ginagamit sa petty cash fund is una, establishment of petty cash fund. So, ang entry doon, debit, petty cash fund, credit, cash MDS, regular. Sunod na entry na ginagamit sa petty cash fund is yung tinatawag nating replenishment. So, pag ni-replenish na, ibibigay na ni petty cash custodian yung lahat ng resibo, yung petty cash voucher na may pirma, na na-receive nila yung pera or ginamit sa petty expenses yung pera. So, ibibigay na yan kay accounting. Ang entry for the replenishment is debit expenses, credit, cash, MDS, regular. So, na-replenish na ulit. Naging, kunyari, ang petty cash fund mo is 20,000. So, after replenishment, 20,000 na uli yung petty cash fund na on hand kay petty cash custodian. Next is adjustment of petty cash fund at the end of the period or reporting date. Ano po yung adjustment na ginagawa natin sa petty cash fund? If there are unreplenished petty cash voucher at the end of the period, ire-report po yun. Tama? Ire-report po yun kanino? Ire-report po siya kay accounting para i-record yung expenses na na-incur at the end of the period na hindi na-report kay accounting during replenishment. So, all unreplenished expenses will be reported. So, ang entry niya, debit expenses, credit, petty cash fund. Yan. So, and lastly is yung closing na ng petty cash fund. Kailan nga nagka-close yung petty cash fund? Only upon termination, separation, retirement, or dismissal of the petty cash custodian. So, anong entry naman pag kino-close yung petty cash fund? So, debit, cash, collecting officer, credit, petty cash fund. Kasi ibabalik po yung pera. Ibabalik yung pera kay cashier. Kaya ang entry niya, debit, cash, collecting officer, credit, petty cash fund. After that entry, wala na po or zero na yung petty cash fund. So, yun po yung mga entries na meron pagdating sa petty cash fund. During disbursement, wala pong entry si accounting. So, pag nagdi-disburse si petty cash custodian, wala pong entry si accounting. Only upon replenishment at saka at the end of the period. For all unreplenished expenses. Next topic natin for cash and cash equivalent is yung accounting for cash shortage or overage. Cash shortage or overage. Disbursing officer is liable for any cash shortage, while any cash overage naman that he cannot satisfactorily explain to the auditor is forfeited in favor of the government. So, pag shortage, liable si disbursing officer. Pag overage, it will be forfeited in favor of the government. The failure of that public officer or disbursing officer to have duly forthcoming said public funds or property upon demand by any duly authorized officer shall be a prima facie evidence that he has put the same to personal use. That is according to Article 217 of the Revised Penal Code. So, anong entry natin if it is shortage? Debit due from officers and employee, credit advances for, or advances to. And pag overage naman, debit cash collecting officer, credit miscellaneous income. So ngayon, pag-usapan muna natin, kailan ba nagkakaroon ng cash shortage and overage? Cash shortage and overage, nangyayari lang yan, sa napag-usapan nga natin last time, is during audit. Pag nagkakaroon ng cash count si auditor, na-identify kung merong shortage or overage. Kaya dyan sa cash shortage, may nakakredit na advances for or to kasi depende kung anong klaseng fund yung na-audit ni auditor. Pwede kasing advances for officers and employee. Advances for payroll. Pwede ring advances to disbursing officer. Advances for special purpose or special operating expenses. So, marami tayong klase ng advances na na-discuss natin last time sa topic na disbursement. So, kung hindi mo naiintindihan kung ano yung mga advances, nandun po yun sa nakalink dyan below yung topic ng disbursement for national government agency. And if overage naman, upon audit ni auditor, is nagkaroon ng overage, so forfeited yan in favor of the government. So, debit, cash collecting officer, credit, miscellaneous income. Another topic is dishonored checks. A dishonored check is a check that is not accepted when presented for payment. Example, a check returned by bank because of lacking of sufficient funds or bounce check or yung DAIF na tinatawag natin. What are the responsibilities of a collecting officer over dishonored checks? Una, si collecting officer dapat daw mag-issue ng notice of dishonored checks. Kanino? To the drawer or to each endorser. Kasi kung hindi siya makapagbigay ng notice of dishonored checks, each endorser, drawer, to whom such notice is not given, is discharged from liability. And ano pang isang responsibility niya? Yung collecting officer shall cancel the OR covering the dishonored checks. A dishonored check shall be settled by tendering payment in cash or by certified check to collecting officer only. No other mode of payment shall be accepted. So, only cash or certified check. Pag sinabi po natin yung certified check, yan po yung mga cheque na sinicertify ng mga bank manager na sinasabi na yung cheque na yun ay may pondo. Hindi po pwedeng na-dishonor yung cheque. Ang gagawin ni payor or ni drawer or ni endorser, magagawa uli po siya ng cheque. Hindi po pwede yun. So, it will only be settled through cash or certified checks. Upon settlement of the dishonored check, the collecting officer shall not return the check to the payer concerned unless the first surrender the previous OR. Yun. So, dishonored checks are recorded in the other receivable account. So, anong entry natin? Kung ang na-dishonor na cheque is collection this year or current year, ang journal entry niya is the other receivables, credit, cash, treasury, agency, deposit, regular. So, bakit cash, treasury, agency, deposit, regular ang ginagamit? It is because this is a collection, and all collection must be remitted to the treasury. Upon remittance, ang entry niya is debit, cash, treasury, agency, deposit, regular, credit, cash collecting officer. Since yung cash natin is nasa account na ng cash, treasury, agency, deposit, regular, upon dishonoring of the check, ang entry niya, other receivables, credit, cash, treasury, agency, deposit, regular. Pero kung yung dishonor na cheque is from prior period or collection from prior period, ang entry niya, other receivables, credit, accumulated surplus, deficit. Because remember, at the end of the period, there is one unique closing entry sa government. Closing entry ha, hindi adjusting entry. This is one of the unique closing entries sa government. We are closing the cash treasury agency deposit regular account. Saan natin siya kino-close? Sa accumulated surplus deficit. Kaya, kung ma-dishonor yung cheque, from prior period, ang entry niya debit, other receivables, credit, accumulated surplus deficit. Yan po yun. Next natin, for cash and cash equivalent is what we call bank reconciliation. A government entity prepares monthly bank reconciliation for each of its bank accounts using adjusted balance method. So, ano siya ha? Bank and book adjusted, hindi bank to book or book to bank. Adjusted balance method. It is prepared within 10 days from receipt of monthly bank statement. Hindi po at the end of the period kasi minsan late po ang bangko. 10 days from receipt of the monthly bank statement. 4 copies of bank reconciliation must be made. Para kanino? COA, head of the agency, accounting division, and bank if necessary. So, 4 na copies ang ginagawa for bank reconciliation for each account or bank accounts ng government. So, last topic natin for cash and cash equivalents is yung cash equivalent. Only debt instruments acquired within 3 months before their scheduled maturity date can qualify as cash equivalent. So, example natin dyan, treasury bills. Ma'am, government na nag-i-issue or CBTR? Yes. But there are government agency na bumibili ng treasury bills. So, pag ang government agency bumili ng treasury bills, same po yan ang accounting natin sa commercial. As if ikaw or parang ikaw si commercial entity na bumili ng treasury bills ng government. Same po yan ang accounting pagdating sa isang government agency na bumili ng isang treasury bills. Kailan siya magka-qualify as cash equivalent? It will only qualify as cash equivalent only if na-acquire mo siya within 3 months before its maturity date. Kunyari, 90 days or 90-day treasury bill, yung nakikita nyo sa kay Balix. Or example is yung tinatawag nating 90-day treasury bill. Since 90 days lang yung treasury bills, qualified agad yon as cash and cash equivalent. Pero kunyari, nakalagay 120 treasury bills, 120-day treasury bills. O titingnan mo muna, kailan na-acquire yung 120 treasury bills. Kung na-acquire siya within 3 months, before the maturity nung 120 days or 120-day treasury bill, saka lang siya magiging cash and cash equivalent. So, there are other categories of financial assets. So, tapos sa cash and cash equivalent. Doon naman tayo sa ibang klase ng financial asset. So, we have 4 categories of financial asset. So, nandyan, letter A, financial asset at fair value through surplus or deficit. Letter B, held to maturity. So, mamaya ko explain yung table. Letter C natin is loans and other receivables. And last, available for sale financial asset. So, let's discuss. Yung una nating type of financial asset is financial asset at fair value through surplus or deficit. Example niyan, investments in stock or bonds, which are pwedeng held for trading or they are initially designated at as financial asset at fair value through surplus or deficit. If initially designated siya as financial asset at fair value through surplus or deficit, hindi na po diyan pwedeng ma-reclassify sa ibang categories of financial asset. Diyan na po siya sa letter A na yan. So, initially, they are measured at fair value. So, na-discuss natin yan kanina. So, at fair value niya. Subsequently, fair value pa rin. At fair value. But any changes in fair value are recognized in surplus or deficit. O yung tinatawag natin sa PFRS, they are recognized in profit or loss. Yung held to maturity naman, example niyan are investment in bonds and other debt securities to be held until maturity. So, ano yung initial measurement? They are recorded at fair value plus transaction cost. So, they are subsequently measured at amortized cost using the effective interest method. Ang held to maturity, these are non-derivative financial asset with fixed or determinable payments and fixed maturity that an entity has the positive intention and ability to hold to maturity. Next category of financial asset is loans and receivables. Examples, accounts receivables, notes receivables, and loans receivables. These are financial assets with fixed or determinable payments and are not quoted in an active market. Ang example natin of financial asset is investment in debt instrument, trade receivables, loans. They are initially measured at fair value plus transaction cost. Subsequently, amortized cost using effective interest method. So, pareha sila ng held to maturity. Yung held to maturity nga lang, ang intention niya, merong positive intention yung management to hold it until maturity. Next natin is yung available for sale financial asset. Under available for sale financial asset, example niyan is investment in stocks or bonds that are not classified under letter A or letter C. Si letter A is yung financial asset at fair value through surplus or deficit. Si letter C, loans and receivables. So, any na hindi nag-qualify doon is mapupunta sa AFS or available for sale. Don't be confused kasi ang ginagamit po natin dito sa government accounting is PPSAS. While on the commercial accounting, gumagamit na po sila ng PFRS 9. Sa PFRS 9, iba po yung categories of financial asset there. Naalala? So, ito, parang ang ina-adapt niya pa rin is yung PAS 39. Yung classification na dati, or yung dating classification ng financial asset sa PFRS. So, kaya meron pa rin AFS. So, there, AFS is initially measured at fair value plus transaction cost. So, kung mapapansin mo, sa apat na categories natin, isa lang po yung at fair value initially measured. Yun yung financial asset at fair value through surplus or deficit. While, because under this category, transaction cost is recorded as expense. So, under available for sale, subsequent measure niya is at fair value. So, since fair value, any changes in fair value, ito naman hindi mapupunta sa surplus or deficit. Mapupunta po siya or it is recognized in equity. So, tingnan po natin yung entries ng example ng mga changes in fair value. Kunyari, ang ating financial asset is at fair value through surplus or deficit. On December 31, 2014, the fair value of the financial asset held for trading. So, ano yung held for trading? Saan siya magko-qualify? financial asset at fair value through surplus or deficit. So, ano yung subsequent measurement niya? Ma'am, at fair value. Pero, any changes saan mapupunta? Ma'am, at surplus or deficit. So, with carrying amount of 500, naging 600,000 daw. The changes in fair value shall be reported saan daw? Surplus or deficit. The following entry shall be made on December 31, 2014 to reflect the changes in fair value. Debit financial asset held for trading, 100,000. Credit gain from changes in fair value of financial instrument, 100,000. So the gain, it is reported in surplus or deficit. While on the other hand, if it is if the financial asset is classified as AFS or available for sale financial asset, the changes in fair value shall be reported in the statement of changes in net asset or in equity or statement of changes in net asset. So, ang example natin, on December 31, 2014, the fair value of a financial asset classified as AFS with carrying amount of 500,000 is 600,000. If the financial asset is classified as AFS, the changes in fair value shall be reported in the statement of changes in net asset. So, entry natin debit investment in bonds, credit, unrealized gain or loss from changes in fair value of financial asset. Makikita mo sa account code niya, number 3, meaning equity account po ito. On the other hand, it is number 4. It is a revenue account, which means reported sa surplus deficit. Ito, reported po siya sa equity. Next natin is yung category ng amortized cost. Subsequently, ganito po yung magiging entry kung amortized cost siya. So, ang example natin, on January 1, 2014, an NGA granted loan amounting to 500,000 to an LGU with annual interest of 6%. On December 30, 2014, the LGU made a partial payment of 100,000. So, ang nangyari, 500,000. So, nagkaroon ng initial payment of 100,000, interest rate of 6%. So, at January 1, 2014, ang entry niya, para dun sa pag-grant ng loan, debit, loans receivable, local government units, credit, cash in bank, local currency, current account. 500,000, 500,000. On December 30, 2014, so nagkaroon ng initial payment or partial payment of 100,000 plus magkakaroon syempre ng interest. So debit, cash in bank, local currency, current account, 130. Credit, loans receivable, local government units, 100,000. Credit, interest income, 30,000. So, paano po nakuha yung 30,000? That is 500,000 times 6%. Kaya interest income niya is 30,000. This case, ma'am, bakit po ganun po yung pag-amortize niya? Ang nangyari kasi dito, it is a loan with stated interest rate. And we assume that the stated interest rate equals the effective interest rate. So, if that's the case, wala pong magkakaroon ng discount or hindi po magkakaroon ng discount or premium dun sa loan. So, stated equals effective. Kaya po, yung interest income niya equals stated rate of 6% times the principal amount of 500,000. After December 30, 2014, the loan receivable account is now 400,000. Okay? So, yan po yung subsequent measurement if amortized cost. Another example of financial asset is yung tinatawag nating derivatives. A derivative is a financial instrument or other contract that derives its value from changes in value of some other underlying or another instrument. So, ano daw yun? Derivative is a financial instrument that derives its value from movement in prices or yung tinatawag nating pwedeng commodity price or movement in foreign exchange rate or pwede ring movement ng interest rate of an underlying asset or financial instrument. So, yun yung derivative. Para ang nangyari, yung value ng derivative is nagdidepende sa movement of another instrument. Kaya derivatives ang tawag niya. Ang characteristics ng derivative, una, its value changes in response to changes in an underlying. Yun yung underlying asset or another instrument. Sunod, it requires no initial net investment or only a very minimal initial net investment. And it is settled at future date. So, alam niyo naman yung mga example ng derivatives. We have options. Ayan, purchase option, put options. Yan, mga derivatives yan. Hedging, yan, mga derivatives yan. So, ano ba yung purpose ng derivatives? The very purpose of derivatives is risk management. Risk management is the process of identifying the desired level of risk, identifying the actual level of risk, and altering the latter to equal the former. Yung national government, wala pa namang masyadong national government na bumibili ng derivatives. Siguro sa mga government corporation, siguro meron silang derivative. Pwede sa SSS, kasi syempre, gusto nilang manage nung risk nung portfolio nila or nung investment nila. Pwede yan sa SSS, sa GSIS, pwede rin siguro sa Pag-ibig. Yan yung mga government agency na pwedeng bumili ng derivatives. Pwede rin sa mga bangko. But sa mga national government, syempre, mga national government, they are on an expense side ng government. Kaya wala pang halos na national government agency na merong derivative. Now is, when do we recognize financial asset? An entity shall recognize a financial asset when and only when, letter A, the contractual rights to the cash flow from the financial asset expire or waive. And the entity transfer the financial assets provided the following condition exists. That the entity transfers substantially all the risks and rewards of ownership of the financial asset and that the entity has not retained control over the financial asset. So, dun mo i-recognize ang financial asset. The second part of our discussion is yung financial liabilities. So, let's define some terms na kailangan natin for this topic. First is liability or financial liability. It is a present obligation arising from past events, the settle of which is expected to result in an outflow of resources embodying economic benefits or service potential. Pag sinabi nating present obligation, it means that as of reporting date, an obligating events must have already occurred. Obligating events are events that creates either, una, pwedeng legal obligation or constructive obligation. A legal obligation is an obligation that results from a contract, legislation, or an other operation of law. Pag constructive obligation naman, it results from an entity's action that create a valid expectation from others that the entity will accept and discharge certain responsibility. So, liability recognition criteria. A liability is recognized only when all of the following criteria are met. A, the item meets the definition of liability. When we say definition of liability, yun yung una nating diniscuss kanina. B, it is probable that an outflow of resources embodying economic benefits will be required to settle the obligation and the obligation has a cost or value that can be measured reliably. So, yun yung recognition criteria ng liability. But now, in our topic, we are tackling about financial liabilities. Financial liability is any liability daw that is, una, a contractual obligation to deliver cash or another financial asset to another entity. B. The contractual obligation to exchange financial instrument with another entity under conditions that are potentially unfavorable to the entity. And last, a contract that will or may be settled in entity's own equity instrument. Example ng mga financial liabilities are accounts payable, notes payable, interest payable, loans payable, bonds payable, accrued payables. So, accrued expenses. So, when do we record financial liabilities? A financial liabilities is recognized in the books when an entity becomes a party to the contractual provision of the instrument. Parang yung financial asset, ganito rin. When the entity becomes a party to the contractual provision of the instrument. Ngayon, alam mo na kung paano i-record yung financial liabilities. Ngayon, magkano yung i-record mo na financial liability? So financial liabilities are initially measured at fair value minus transaction cost, except for financial liabilities at fair value through surplus or deficit. Example, they are designated as financial liabilities and derivative liabilities, whose transaction costs are expense. So, fair value and transaction cost. So, initially, kasama yun sa cost ng financial liabilities. But, if the financial liability, katulad dun sa financial asset, is through surplus or deficit, yung transaction cost niya are expense. Transaction costs are incremental costs that are directly attributable to the acquisition, issue, disposal of financial instrument. So, bigyan natin ng example na entry. On January 1, 2014, BTR issued a 5-year 100,000 face value bonds for 95,787.63. Interest rate is 5% payable annually. The prevailing interest rate is 6%. The bonds were issued through an underwriter and an agency paid bond issue cost of 34,000. So may bond issue cost na 34,000. The financial liability was measured at amortized cost. So pag amortized cost, since hindi siya financial liabilities through surplus or deficit, all transaction cost is kasama sa cost ng financial liability. So, ano yung entry natin? So, upon issuance ng bonds, debit, cash in bank, local currency, Bangko Sentral ng Pilipinas. So, naka-receive si government. Debit, discount on bonds payable. Yun yung difference ni face value at saka kung magkano yung na-receive mo. Discount on bonds payable domestic, 4,212.37. Credit bonds payable at face, 100,000. Next is bond issue cost domestic, 34,000. Credit cash in bank local currency Bangko Sentral ng Pilipinas, 34,000. Take note po, yung 34,000 is, ang account code niya po is number 2. Meaning, ano po yung number 2? Liability account po yan. So, meaning, included po yan dun sa cost ng financial liability. Hindi po number 5 or expense. Accounted as cost ng financial liability. So, ganito po yung entry for financial liabilities at amortized cost with transaction cost. Subsequent measurement ng financial liabilities, they are measured at amortized cost except for financial liabilities at fair value through surplus or deficit. Kasi yun at fair value. So, ang any changes doon sa fair value, kung yung financial liabilities is at fair value through surplus or deficit, mapupunta sa surplus or deficit or profit or loss. Example natin, ito yung given. Sabi dyan, any difference between the face amount and the present value of a financial liability is amortized through the interest expense account using effective interest method. So, the difference between face and the present value is either discount or premium. Pwedeng discount or premium. So, tingnan natin dito sa example natin kung discount siya or premium. Yung face value niya, 100,000 yung bonds. Yung term niya, 5 years. Selling price, 95,787.63. O, tinan mo, face value, 100, 95,000 niya ibinenta. Discount or premium? Discount. Issue date, January 1, 2014. So, kailan siya mag-e-end? So, that would be December 31, 2018. Tama. Kasi 5 years yan eh. So, we have 14, 15, 16, 17, 18. So, December 31, 2018 mag-e-end. Normal interest rate, 5%. Effective interest rate, 6%. So, discount on bonds payable now is 4,212.37. So, tingnan natin yung amortization table nitong bonds na to. Ganito yung amortization table niya. So, initially, ito, kung magkano mo binenta, 95,787.67. So, kunyari, at December 31, 2014, magkano na ang naka-record na bonds payable or net amount ng bonds payable sa libro natin? The amortized cost at the end of 2014, mali, tama. The amortized cost at the end of the period ng December 31, 2014 is now 96,534.89. Meron ka lang amortization table. Tingnan mo sa amortization, yung carrying amount niya nakalagay dyan, 96,530.89. So, the amortized cost of the bonds payable on December 31, 2014 will be 96,534.89. O kung makikita mo dyan sa amortization table, yung end ng December 31, 2014 is 96,534.89. So, other computation is magkano ba yung face value niya less the remaining balance of the discount, which is 100,000 face value less the balance of the bond discount, 3,465.11. Or, yung book value of bonds, yung naka-record sa atin sa libro, na 95,784.63 plus yung amortization ng bond discount. Plus yan po plus 747.26. Paano naman na-compute yung 747.26? So, paano naman nakuha yung 747.26? That is the difference of the nominal interest and the effective interest na 5 and 6%. So, 5,000 less, 5,747.26. Kaya meron tayong amortization of bond discount na 747.26. Now, let's go to the recognition of a financial liability. It is recognized when it is extinguished, such as when it is discharged, waived, canceled, or it expires. Example, a government entity paid 1 million loan from a local creditor. Upon payment of the loan, the entity shall recognize its liability from the local creditor. The journal entry, debit, loans payable, domestic, 1 million. Credit, cash in bank, local currency, Bangko Sentral ng Pilipinas, 1 million. Or, if the loan is condoned or waived, the entry will be debit loans payable domestic, 1 million, credit miscellaneous income, 1 million. The last topic for this module is about provisions, contingent liabilities, and contingent asset. A provision is a liability of uncertain timing or amount. It is recognized in the book if all the recognition criteria for a liability are met. That it should be a present obligation, a probable outflow, and reliable measurement of the liability. If one or more of the criteria are not met, the item is a contingent liability, not a provision, and therefore not recognized as liability. Anong mangyayari? It will only be disclosed in the notes of the financial statement. Provision can be measured as follows: using best estimate, risks and uncertainties, present values, future events, or expected disposal of assets. And provision is reviewed at each reporting date and adjusted to reflect the current best estimate. Example: East Avenue Medical Center purchased medical equipment with estimated useful life of 5 years on January 2, 2014. Ito yung data niya. Yung purchase price is 1 million, delivery cost is 15,000, dismantling cost at the end of 5 year is 80,000. So meaning yung outflow or cash outflow natin outright is 1,015,000, which is the purchase price and delivery cost of 15,000. But the total cost to be recognized as medical equipment will be the combination of the purchase price, delivery cost, and the present value of dismantling cost. So magkano yon? 1 million plus 15,000 plus present value of 80. Assuming that we are using average borrowing rate or interest rate of 10%. So that present value factor of 1 of 10% is 0.62092 times 80,000, that would be 49,674. Ma'am, ano po ba yung dismantling cost? This is the cost that you will be incurring after 5 years. After the useful life of 5 years, 80,000 will be incurred for dismantling the medical equipment. Meaning, yung 80,000 is hindi siya 80,000 ngayon. 80,000 siya after 5 years. So, we use the present value of present value factor of 1 for 10%. So, yung 49,000 will be charged as liability. Ipapakita natin kung anong klaseng liability. But, initially, ang na-record mo lang ay 49,000. Pero gagastos ka ng 80,000 at the end of 5 years. So anong gagawin mo? You will be amortizing yung 49,674 para at the end of the year 5, yung dismantling cost will be 80,000. So paano ina-amortize? It will be charged sa interest expense. So on year 1, 49,674 times 10%, interest charge is 4,967. So magkano na yung carrying amount ng liability? 54,641. So paano yung journal entry niya? Initial measurement, January 2, 2014, debit medical equipment, 1,064,674. That is the combination of the purchase price, delivery cost, and the present value of dismantling cost. Credit, yung cash outflow, which is cash MDS regular, 1,015,000. Other provisions, yan na po yung para dun sa dismantling cost. 49,674. Ma'am, bakit po provision? Bakit po liability? Because company is assuming that at the end of 5 years, the company will be spending 80,000. So meron siyang liability after 5 years na magagastos for dismantling the equipment. Kaya provisions. Para sa adjustment, year 1, or end of year 1, debit depreciation expense or depreciation machinery and equipment, 202,785. Credit accumulated depreciation, medical equipment, 202,785. Another adjustment is the amortization of other provisions. So debit interest expense, 4,967. Credit other provisions, 4,697. Saan nanggaling? Yun yung kanina, yun yung 49,674 times 10%. So at the end of year 1, magkano na ang value ng other provision natin? The value of other provision will be 54,641. So, every year, there will be amortization of provision. So, makikita mo dyan sa table natin ng amortization, year 5 or at the end of year 5, magkano na yung value ng dismantling cost natin or the other provision? 80,000. Ma'am, paano po nakuha yung depreciation expense na 202,785? It is from, yan yung computation natin. Magkano nga yung cost ng property or ng medical equipment? 1,064,674 less residual value. Take note that in getting the residual value of 5%, you are not including dismantling cost. So, paano natin nakuha yung residual value? Only those cash outflow, which is 1,015,000 delivery fee. So, 1,015,000 times 5%, that is 50,750 over 5 years. So, depreciation expense, 202,785. Other liability is what we call contingent liability. A possible obligation that arises from past events and whose existence will be confirmed only by the occurrence or non-occurrence of one or more uncertain future events not wholly within the control of the entity. Or, it is a present obligation, not possible, present obligation that arises from past event but is not recognized. Bakit? It is because it is not probable that a outflow of resources embodying economic benefits or service potential will be required to settle the obligation, or the amount of the obligation cannot be measured reliably. Diba, ang requirement natin to recognize liability, una, present obligation siya. Pangalawa, there will be a probable outflow of economic benefits. Next, it can be measured reliably. So, kung possible obligation siya, contingent liability yon. If not probable yung outflow of resources, contingent liability yon. If you cannot measure, contingent liability. Pero kung ang nangyari is a combination na hindi mo ma-measure, so you cannot measure the reliably and it is not probable, guys, hindi yon liability. So that is a contingent liability. While contingent asset is a possible asset that arises from past events and whose existence will be confirmed only by occurrence or non-occurrence of one or more uncertain future events not wholly within the control of the entity. Difference niya kay contingent liability, ito, possible asset. So, summarize natin kung paano siya nire-recognize or dinidisclose sa libro. If it is a contingent liability and its occurrence is probable, it is recognized and disclosed, meaning provision na siya. But if the occurrence is possible, disclose only. If the occurrence is remote, ignore. On the other hand, if it is a contingent asset, it will be only disclosed in the financial statement or notes to financial statement only when it is probable. If it is a if the occurrence is possible or remote, ignore lang po. Hindi i-disclose sa financial statement. So that's the summary of contingent liability and contingent asset. So this ends our module for financial instrument. I hope you learned something, and please don't forget to subscribe, like, and share this video. Thank you.